Howdy, Jacob here. Today we're looking at Booz Allen Hamilton Holding Corporation in the IT services industry. Just under 20 billion market cap on 22.7 billion enterprise value. We are seeing decent growth in the revenue side, 5.5 billion 10 years ago, 9 years ago to 9.3 billion, which is about 4 to 6% annual growth rate. So pretty solid there. Increase in gross margin. However, we are seeing a decrease in operating margin, but it has been relatively flat. So if you move the most recent year, it is very consistent. Dividend paid out has been increasing quite a bit, where it's now quite a bit of their. It's a high payout ratio. Return on invested capital in the low teens, and balance sheet shows 405 million cash on hand with 2.7 billion long-term debt. So quite a bit of net debt, quite a bit of debt here. That 2.7 billion though is is about 3 years, maybe 4 years of their 5-year average free cash flow. If you're looking at about 500 million, 5 to 600 million is still quite a bit of debt though. So I wouldn't necessarily say I'm concerned with the balance sheet, but we're definitely not. I'm not feeling fantastic about it, especially with a dividend that's currently paying out 40%, 50%. That's a good payout ratio for 1.3% yield, and then a lot for share repurchases as well. So it looks like, the most recent rolling 12, they went into debt to fund share repurchases and a dividend. And again, I've gone over this before, but if your debt doubles and your free cash flow doubles, the payout ratio is really the same, or your debt consideration is really the same, but it's whether that's actually occurring or not. And so we do see that long-term debt is less than half up from 10 years ago, where their free cash flow is more than double or almost doubled. So free cash flow has gone up greater than their long-term debt, but that's not to say their debt still isn't a concern. If you never care about your debt, that's going to be a concern. If you just keep refinancing, yes, you can increase your free cash flow, but there's just going to come a time where you want to be a safer company and de-lever, especially as a more stable business. You don't want to be held to a lot of debt. It's the same as you as an individual. When you're working, it's not bad to be a little bit levered, but the second you're done working and you're living off of the assets you have on hand, probably not the best idea to be in a whole lot of debt. The house people out there, say what you want, don't really care. Do what you want, I guess. But the most optimal way, pending, you're not a billionaire or 100 millionaire with a bunch of houses that you own a bit of, but that's not what I meant. Yeah, I got off track there a bit, but really the debt to fund these projects, you really want to, when you're becoming more of a stable business, not be too levered. So let's start making some assumptions here. And on the revenue growth side, we are looking at good growth here. I'll stick with maybe 6%. I do think, a slight premium above the market seems fairly reasonable to me. I'll stick with that margin there, 5 to 6%. I think that's pretty reasonable for the dividend payout. I'm not going to increase that. It's already quite a bit. I want them to figure out how to keep that the same while increasing debt payments and such. I want to keep a little bit of capital allocation open for debt pay down, reinvestment, and that such. So 1% would be about 200 million. Offset stock-based compensation 290. I'll say 0.5%. So with this assumption that I have going on, at the end of 7-year period, you're probably looking at a dividend that pays about 30 to 35% of the payout, a payout ratio of 30 to 35%. Share repurchases that are about 30%, maybe 25 to 30%, which just leaves about 40% to pay down your debt, reinvest to get these types of returns and margins. I think I'm pretty comfortable with that assumption. So right now, It does look a bit expensive for me. I do think the company's numbers do look interesting, and it is a company I want to own, but I will be waiting for the right price before I do further research here. So hopefully you enjoy the video. Have a great rest of your day. Thank you.